Fellow investor, this is Money Mind channel. For anyone looking for easy way to invest in the stock market, there's no better way to invest your money like to invest in the global diversified ETF, like the ETF I'm going to talk about today, which is iShares Core Equity ETF Portfolio. So if you haven't heard, iShares a couple years ago they came up with a product which is called one ticker symbol ETF. So pretty much is a band of ETF that mix them together. They make as one unit. You can just buy one, but you literally buy a bunch of ETF together. And there's a two type of ETF or three type of ETF. There's one which is all equity, so it's all stocks, and there's one which is all bonds, and there's couple which is a mix of stocks and bonds together, right? So today in this series, or in this episode, I'm going to talk about XEQT, but also I will talk about other ETF from other provider like Vanguard and BMO. They all have the same type of product, it's just a different and pretty much a different name, but investment is all kind of the same structure of investing. So let's go a little bit deeper on this ETF. I mean, you can see the price today was 21.02. So overview, we'll talk about performance, key facts, holdings, exposure breakdown. Overview, why XEQT? Why would you invest in this ETF? It's a simple and efficient way to gain exposure to a portfolio of ETFs that is broadly diversified across the regions in one convenient package. So you'd have 4 ETF altogether, so across the globe. And the reason number two you'd invest in this ETF will be continuously monitored and automatically rebalanced as needed in order to maintain asset class target weight. So for example, US is going higher than Canada, then they just bring it down. If the emerging market is lower, then they would sell, for example, the performing ETF like a US, for example, right now is doing really great, so they would sell some unit in a US market, and they're gonna buy emerging market. So that's called rebalancing, right? So you buy the underperformer and you sell the overperformer, right? That's a way of balancing. So instead of doing it yourself, they will be doing that, managers, and the pool of the money that's in this ETF exceeding billions, right, at this moment. Number 3 will be low cost structure. So for example, in mutual fund, as it's you pay from 1.5%. Here in Canada is 1.5% to 2%, but in this case you only pay 0.18. That's a very low. So to put in perspective, so let's say for example you have a $10,000 invest in this one, you would pay $18 every year. That's a very low. $10,000, you'd only pay $18 every year. So if you have $100,000, of course you're gonna pay $180, right, annually. But if you look at the dividend you're gonna receive, that dividend themselves, they will just pay that MER. So let's go to performance of the ETF. Performance, you would see here there's no match. Okay, return not available, as there is no, as there's less than 1 year performance data. This ETF was structured in July last year, 2019. So according to Canadian rule, Security and Exchange, the way they put their rule is any funds that's less than a year, of course, it cannot provide the chart of performance. So that's why they didn't provide any chart here of performance, right? That's just because of the rule they have. And let's come to distribution, which is dividends. Another word we call the dividends. So let's say full chart of dividends, and we can see chart right here. September 24, 2019, because remember this fund was incepted in July, or end of June, And then in September they pay first dividend was 0.082, so about 8 cents. And in December, final day of the year, they pay 18 cents. And this year they paid 6 cents. So they pay quarterly, every 3 months. If we can see the table, you can see right here. Just close that. Let's go ahead. Key fact about this ETF. So net asset as of today, so it has about 60, this is the number, 65 million, 65 million invested in this ETF right now. Because it's been a year, but that's a lot of money, right? 65 million being invested in floor within a year. That's impressive, actually. Exchange, where this ETF is exchanged, you can buy this ETF in Toronto Stock Exchange. So of course you're not going to buy in the US, but you buy in Canada. Fiscal year, where they report their taxes, it's December 31st. 2019, 2020, 2021. Number of holding, it's 4. So it does have underlying ETF, 4 of them. Asset class is multi-asset. Unit outstanding, it has more than 300,000 or 3 million of share. That's the shares. Number of unit underlying holdings. So these are stocks that this fund is invested in. They are almost 9,103. Price at the moment is 21, and we'll see the this stock here. Let's go to this chart and we'll see what stock this ETF is invested in. Top holdings. You have Microsoft, Apple, Amazon, Royal Bank of Canada, Shopify, Toronto Dominion Bank, Enbridge, that's Energy Company, Canadian National Railway, Facebook, Bank of Nova Scotia. Those are the top holding, which at the moment they're about 13% of weight in the ETF. Portfolio characteristic. So distribution is quarterly. Investment program. So if you wanna do DRIP or dividend reinvestment plan, you can do that. So you have your money, instead of you getting the distribution or the money that you'd get from dividends, they'll take those money and they reinvest. You'll sign up with your brokerage. Eligible for registered plan. So here in Canada we have TFSA and RRSP. Yes, you can invest in those ones. Last distribution was 6 cents. Distribution yield is about 1.17%. As you can see, one of the most stocks, or the biggest stock in this one, the Amazon, Microsoft, Shopify. So Shopify, Amazon, Facebook, Google, they don't pay dividends, so the yield will be lower because you expect a high return. Management fee is 0.18. Management expense ratio, MER, it is 0.20. Risk indicator from 1 to 5 is about 2, so low to medium risk. Holdings, as we said, there were 4 of them. So it does hold. This is, we call this type of ETF, we call them ETF or fund of funds. So what it does is that one fund, they combine 4 together, or 5, 6, 7, depending on the structure of the ETF. They, or iShares, that's what I say they, I mean the managers in iShares or BlackRock, they take those 4 ETF. In this example, or in this instance, they have iTOT, which is iShares Core Total US Stock Market, which holds about 46%. We have developed world, which is a Europe, Japan, Australia, about 25%. Canada, it's 23 to 25%. Emerging market is about 5%. Then you can see here there's 24, 25. So they will rebalance. But technically here it's supposed to be about 40, 45% or 40%, 30%, 25%. But it depends on the market, how it works, how they perform. They will outweigh each other, and the managers will rebalance these ETFs to come back to the way that they were designed. And you can see US cash, it's 0.014, because of course it holds cash. When they sell and buy, they would have a little bit cash left. And so we have US and you have Canada, right? Because they do buy most of those stocks in US dollar, and they would have some in Canadian as well. Exposure breakdown. So the equity, 99% of this is equity. So there's no bond in it. There's no bond element in this stock. There's stocks and of course real estate. And that's all. So who is this ETF is pretty good for someone who, especially for millennial, right? You have high tolerance. You don't want to bond your portfolio, and then instead of choosing individual stocks, you just have one of these and put all your money in it, and pretty much you're diversified. It's one, but it's fund of funds. You have to understand is one fund, but it has almost 9,000 stocks in it. So instead of picking individual stocks, you can just buy this one and call it a day. So this is really great for a new investor or someone who doesn't want to bother too much with picking individual stocks. So if you have any question about this, this ETF, just let me know. I'll leave your comments below. And if you haven't subscribed to this channel, please do so. And thank you very much for watching.